Good evening, everyone. Thanks for showing up on a Sunday, November 9th. Tonight is kind of like honestly an informal session. We call it Ask Us Anything, and the topic is all about the CSS profile. We will have a few slides just to kind of like summarize, some important things about the CSS profile, but um, we're here to answer questions that things that are confusing to you, things maybe you've started the CSS profile and you've, hit a roadblock, or even if you haven't started the CSS profile, it's okay to just ask questions, in preparation of starting. And we picked tonight, the ninth, because we're kind of in between. A lot of students have finished their November 1st deadlines. I know there's a November 15th deadline, which is also a big deadline, but November 1st is a bigger deadline. And for students who have applied November 1st, the CSS profile tends to be due around November 15th or pretty soon. So we know that that pressure of doing the CSS profile and getting that done is coming up, pretty quickly. So that's just some quick background, but I wanted to introduce Joanne Dashel, who is with Private College 529 and also a CollegeWell, and they are sponsoring tonight's event. And Joanne is going to explain more about what they do and what their product is, and it's really valuable for you to understand this type of a 529. It's a little different, and I'm not going to go into details, Joanne. Well, it's a little different about than your traditional 529s. It's actually really could be beneficial for families with seniors to understand it because, as Joanne will explain, you might be able to lock in some tuition at this year's rate, which, we all want to keep saving or kind of locking in and freezing tuition however we can. And this is just like one opportunity that a lot of people aren't aware of. So with that, Joanne, actually, sorry, let me share slides and I can share your slide that might be more helpful as you explain more about Private College 529.
Well, thanks so much, Debbie, and thanks very much for having me. I'm very happy to be here tonight and for our organization to sponsor this really important and timely webinar. So again, my name is Joanne Dashiell with CollegeWell and Private College 529 Plan. We are a nonprofit organization that's managed by a consortium of close to 300 private colleges and universities across the country. And our mission with CollegeWell, before we get into Private College 529 Plan, but our mission at CollegeWell is to provide a clear path and expert guidance to help families figure out how to save and pay for college. I know a topic that is often very overwhelming for many families. And we do that by providing guidance from the experts. And these are financial advisors who are working with families every day on how to make college more affordable, as well as we bring in the experts from our college campuses, those who work at admissions and those who work in financial aid, who of course are reading all these applications and making decisions on admissions and financial aid award letters to just keep families on top of what's happening and all the changes that are going on in higher education these days. Our member colleges also sponsor Private College 529 Plan, which it is very similar in terms of the federal tax benefits that come with 529 plans. Of course, those are the sort of the gold star when it comes to saving for college. 529 plans, their main benefit is that they grow tax deferred and distributions are tax free as long as they are used for a qualified expense. And the good news is that qualified expenses do continue to grow, which is always exciting to see. Our 529 plan works a little bit differently than your traditional 529 investment plans that are invested in the market and are subject to market volatility. With Private College 529 Plan, your contributions are actually purchasing tuition at the current year rates. So families who are contributing to their Private College 529 account this year between July 1st and June 30th are locking in, they're actually starting to prepay tuition at any of our colleges and universities, but prepaying the 2025, 2026 year rates. And because every college and university has a different tuition and fee rate that they're charging this year, whatever you contribute to your account is locking in on a percentage basis the current year rates. And you can take that to any of our nearly 300 college member private colleges and universities. Debbie has a link where I know she's going to drop that into the chat. Debbie, I put that into the chat earlier.
Yes,
And
I just put it in, and actually,
perfect.
I'd love if people feel comfortable kind of sharing some of
Yeah.
the colleges that their students are applying to, because if you're here tonight, your student is applying to a CSS Profile college, and we'd love to kind of know what some of those colleges are. Particularly, if we can scan the list, Joanne might be able to quickly see if any of those colleges are members and offer the private college 529 plan.
Yeah,
So.
excellent, excellent. Yeah, and USC, I'm seeing at the top of that list is one of our colleges and universities. And we have hundreds, as I mentioned before, across the country. We have large research institutions, small liberal arts colleges, and everywhere in between, very selective institutions like USC, Princeton, Stanford, Duke, Notre Dame, Georgetown, but also a large selection of colleges and universities that accept the majority of their applicants. So literally, every kind of college and university that you can think of, and it's all private colleges and universities. And of course, we do see those tuition and fees increasing across the board. And so this is a great way to sort of lock in tuition and fees. And because it's sponsored by the colleges and universities that participate, your prepaid tuition is also guaranteed by the colleges and universities, which just makes this plan a little bit different than your traditional 529 plans, and all the other plans are sponsored by the state. It was actually a consortium of colleges that got together over 20 years ago. We celebrated our 20th anniversary in 2023, and they got together over 20 years ago to say, hey, we really want to provide an opportunity for families to lock in tuition and use that at any college or university that participates in the consortium. There are no fees, so every dollar that you contribute is locking in tuition at today's rates. And again, this year, families are locking in 2025, 2026 year rates that students are actually paying. As tuition increases, so does the value of your prepaid tuition. And again, I mentioned that because the tuition and fees do vary from between every college on our list, you would own a different percentage of tuition at each college or university, but that's very easy to track within your account. Now, I know we have families of parents of high school seniors on the list, and I know many folks and Tulane, again, is one of those institutions that's on our list, Syracuse as well, Marist, yes, Drexel, Northwestern. And so again, locking in at this year's rate. So now let's say you're applying to these institutions, you see that you're applying to, or your son or daughter is applying to a private college 529 plan school. You can, again, lock in rates, this year's rates to use 3 years down the road. So there is a 3-year holding period before you can start redeeming your prepaid tuition, but that still means that you can benefit from guaranteed prepaid tuition when your son or daughter is at least a senior in college. College tuition continues to increase, as we know, many families know that, and you're offered a financial aid package that doesn't always increase with the tuition and fees that are increasing at the college or university. So one example, you could lock in when you start getting those financial aid award letters, you could lock in whatever that gap is and prevent that gap between what your bill is and what's going to be offset by grants and scholarships and other financial aid opportunities. You could prepay that amount, and whatever percentage that is, let's say that's 10% of tuition, you always own 10%. Years down the road, you can redeem that 10%. No matter how much tuition increases, you always own that amount at that institution. And you could sort of think about that as like a guaranteed scholarship in the senior year of college. Now, as I mentioned, there is a 36-month clock on prepaid tuition. And so If you, let's say, let's use an example, let's say that you contribute to your account starting on December 1st. That kickstarts that 36-month clock. And so any contributions that you continue to make even after December 3rd, 1st, but before June 30th, before the end of the plan year, are going to lock in this year's rates. And then you would be able to use that as early as December 1st of 2028. So that's how that 3-year clock works. So again, you could lock in anywhere between July 1st and June 30th. You lock in this year's rates. After July 1st, if you start contributing to an account, you would be locking in the 2026, 2027 year rates. So if you have younger children and you want to start saving as early as possible, you can do that too. And you would benefit from many more years potentially of prepaid and locked in tuition. If the student doesn't attend a college or university that is a participating college and university that's on the list. Because it's still a 529 plan, you still benefit from tax deferred growth and tax redistributions. You can take that, you could take a refund and you could send that to any non-participating college or university, a public college or university. The refund amount is whatever you contributed to your account plus up to 2% compounded annually on top of that. So it's really
And there are no distribution fees.
That's right. No distribution fees. And so what's nice about this is you don't have to worry about market volatility, especially as college is getting closer. I have a high school junior myself, and I have both types of 529 plans. I have a private college 529 account where I'm locking in tuition. I can use that at any of our close to 300 private colleges, private or college or universities that participate. I also have my state-sponsored 529 savings account. I am not subject to market volatility with PC 529, and I am subject to a little bit of market volatility in my traditional account, but they both work really well together to help meet college expenses.
So Joanne, there's two questions. One is, can somebody transfer money? Well, actually it's the same, but can somebody transfer money from a regular 529 to a private college 529? And the
Sure
same thing,
can.
can they transfer from an UGMA or an UTMA to a private college 529?
Um, yeah, they would have to. So to answer the first question, yes, absolutely, you do. Because it's all under 529 umbrella. You can transfer funds without penalty, no penalty on any rollovers to private college 529. You just want to make sure that you're thinking about that 36-month hold and when you'd be able to use that as part of your strategy. When it comes to UGMA or UTMA accounts, because those are technically irrevocable gifts, they would have to be opened in a custodial 529 account, but we could walk you through the process of how to do that.
Okay. And somebody asked, and you mentioned it, but just to repeat it, I mean, if you have traditional 529 plans, you can still keep those and use this in addition.
You absolutely can. Yep, you absolutely can. You can have multiple 529s and think about using a prepaid and a 529 investment plan together as a nice a hedge against tuition inflation that's protected from market volatility, then also potential growth with a 529 investment plan. Word of caution, and this is where you might want to speak with a financial advisor, especially if we've got college that's really close here. You want to make sure that any 529 investment plan is very conservatively balanced right now. Just with your child going off to college, you want to make sure that those resources are available to you when you need them.
Okay, well, great. Thank you so much, Joanne. Really valuable information. And as you already saw, people listing the colleges that their student is applying to, and a lot of them are on the list. I'll put the list again here. Here's the link to the 300 member colleges who participate, and you should anybody here, if your student's applying to a CSS Profile school, is a good possibility that that school is on the list, and you should check it out and consider, because as Joanne said, you can start the account now, and basically you would be locking in this year's tuition, which you'd be able to use the money towards in senior year. And every year, unfortunately, tuition goes up, and we've seen it go up anywhere from 3 to 10%. So that's savings that you would be locking in now.
And I have also, Debbie, put my email address in the chat. So if anyone has follow-up questions, someone, either myself or someone on my team, would be happy to get back to you.
Okay, great. Well, thank you. And so moving on, because tonight was about answering people's questions. We actually had some slides, but I'm seeing questions come in already, so I'm not even gonna pull up the slides. I think we should just start with answering people's questions. So I'm gonna stop the share and go back to the chat on some of the questions. I'm gonna read the questions that have already come in, but again, this is also informal, and these are technically Zoom meetings. So if anybody wants to unmute yourself, please do, and you can ask your question that way. We haven't run an AMA for the CSS profile before, but we've done them a lot with questions related to student loans. And quite honestly, people just start to get comfortable and they just unmute themselves, or you raise your hand and you can ask your question that way. But either way is fine if you want to put it in chat or raise your hand. Okay, so I'm going to go all the way to the beginning with the first question. And Luann, it is about, and oh, I realized, sorry, we jumped right into Private College 529, but I didn't introduce Luann Lee, who is from your college planning coach. And Luann and I have been doing these sessions now for probably 5 or 6 years.
At
And
least.
Luann works with families. She actually handles a service that we offer called a the CSS Profile Review. If you really, if you don't feel comfortable submitting and you want a professional to look it over. So I have complete trust in Luann's knowledge and expertise, and she's going to help answer these questions. So the first one, which I'm not surprised, we get this a lot, is about the value of the primary residence. Is the appraised value of the primary residence acceptable as its market value? Or and maybe basically explain what value somebody should use.
Right. And that's the that's one of the slides that everybody always asks about. And it's very suspect. The schools that use the CSS profile, they're all going to use their own calculations, their own way of looking up things, but in general, so you can just take a look at what's in your area, what's selling that might be close to the, what your house is. And then think, okay, if I had to sell this tomorrow in a fire sale, what could I get? Not what you want to get, but what could I get? Because I needed to put new paint and new carpet, and the kitchen hasn't been updated in 15 years or whatever. So a lot of people use Zillow, which is a lot of times overpriced, subtract, 20% off of the value of Zillow. So, just be reasonable, and that can help you. If you feel that the school has overvalued it, you can always ask them, well, where did you get your figures?
Yeah, and Luann, maybe you explain a little bit how the schools do use that information if they're asking for it, and do all the CSS profile schools ask for that information? Do they all use it the same way?
Correct. So not all schools will use the CSS profile will assess the value of your equity. Quite a number of them do not. Some will assess it at 100%. And when I say 100%, remember the CSS, your assets are assessed at 5% on the CSS profile, 5.64% on the FAFSA. So, it's their calculation. So some schools might assess it at 100%. Others might 1.5 times your income. They all have their own different formula. You could call the school and ask them. Some will disclose it and some will be kind of vague. So.
Okay. Somebody is asking, how many times can I go back into the CSS profile to add a college?
Oh, as many times as you want. It's much easier to do on the CSS profile than it is to add to the FAFSA. So once you've submitted your CSS profile, it goes off to the schools that you added. And if your child is finished a couple more applications and you're ready to pay that fee because you were concerned that maybe they wouldn't get the applications, and you just go back to the College Board, log into their College Board account, and just go to where it says add remove colleges. You can add it there, make sure that the CSS code number is correct for that particular school. And then you can go down to the last screen where you're going to review, and then you can pay your fee and submit.
What about making corrections?
I
What
didn't hear
about
you, Deb.
making corrections to the CSS profile? Can you go
Okay,
in and do that?
so years ago, you couldn't make a correction. Now, a couple years ago, they said, oh, yes, you can make a correction if you need to. So, it's not something that you can go in and continue to make corrections. So just be mindful of that. You can make one correction, and then if you have to make more, then you have to go to each individual school that you've submitted that CSS to.
Okay. Let's keep going.
And can I add too to that? If you're thinking, I need to make a correction because, gosh, I earned so much less in 25 than I did in 24, and I just got my 25 taxes done. Let's say it's February, and I want to go in and make a correction. That's not a correction. That is an appeal.
Which is a whole nother topic, which we deal with
Yeah.
after more in January, February, March.
Correct. Yeah.
Okay. Next question says, please review what to do with multiple college kids. My oldest is a freshman in college, and we already did the CSS profile for him. How do I initiate a new CSS profile for my younger child?
You go to that child's College Board account, and if you can open up the other child's account and have it on another screen and kind of go back and forth. But just remember, if you're a freshman in college, you want to check, does that school require another CSS? If you received institutional aid, oftentimes they do. And you want them to know also, hey, we've got 2 in college this year, because a lot of the CSS profile schools will still take into consideration now that you have overlapping children in college at the same time.
So maybe just to compare, if you filled out the FAFSA and you're taking out, and your student's going to take out federal loans, then you need to fill out the FAFSA every year. But do you have to fill out the CSS profile every year at all the colleges, or is it college by college dependent?
It's just dependent on what the college expects. Usually, if you're going to receive institutional aid and I'm talking about need-based aid, not merit scholarship. So if your student only received a merit scholarship, they didn't receive any kind of grant or institutional aid, then it's worth a call to the financial aid department and ask, we're receiving merit scholarships. Do we still need to submit the CSS profile? If or the FAFSA, if you're not accepting any loans, whether it's the student loans or the parent plus loans on the federal side, you can ask them, is it required that we continue to file the FAFSA if my student is getting merit scholarships? Some will say yes, most will say no.
Hmm. Okay, here's a question that comes up a lot, which is, valid. Can you offer some advice on the CSS question that asks what the student's parents plan to pay for the student's educational expenses? Yeah, people kind of get,
It's a
flummoxed
touchy
by,
subject.
yeah.
Yeah, you're panicking because you're
Yes.
wondering, what should I put here? Are they trying to, is this a secret question or something? And I'm smiling only because I'm not making fun of any of you. It's such a stressful period. Just be honest, and you can put what was your plan? What were you planning? And this is the amount that is not including loans. So let's just say that you have a private college 529 plan that you can use right now. Divide that up by 4 and say, okay, that's what my college fund was, and that's what I've got in mind to pay out of pocket without taking on any loans. Or if you know that, geez, I've got my, my mutual fund over here, which was my, my college plan. And I know that I can continue to add $1,000 a month. You can add that. But, if you're, you've had a lot of situation, that job loss or medical expenses or whatever, and you don't have a savings for college anymore, and you're hoping and praying that there's going to get aid, and $1,000, then put that there. It's not, they're not going to penalize your student. But the reality is, if you don't have 20 or $40,000 a year and you put that there, and they're going to come back and they're not offering you very much, how are you going to come up with that? So it's not a trick question. It's just, they're just trying to gauge things.
Okay, next question. Somebody is saying, my son earned a small stipend for a side gig, and it was a few $100s in 2024 and not included in his tax return. Do we need to report this income somewhere?
Yeah, I mean, where it asks, so sometimes students, get paid cash for babysitting or dog walking or such, and they feel like, hey, yeah, I did earn money. You can put that there. It's not in if they didn't get a W-2. I'm looking at the 529 and I'm thinking W-2. But e- or you didn't file taxes because they didn't earn that much, but they got a W-2. And you're thinking, what did I do with that? Contact their employer and ask them, because they are going to ask for that W-2 and you're going to need to upload it.
Well, and somebody might not have asked this, but I know I've seen this question a lot in the Facebook group. What if your student doesn't file taxes? What do they need to supply to the colleges to?
So if, just like on the FAFSA, you think, why are they asking about tax information on my student? They've never filed a tax return. The IRS is sending notification, hey, we don't have a tax return or a W-2 on this person. So when you get to, after you've filed the CSS profile, you've hit submit, and let's say that the schools are going to use the iDoc, which is the service that the College Board provides, to where you upload your tax returns, W-2s and such. There's always a little question if you do not have a W-2 or say a 1099 or such. Just click here and it brings up a form. It's kind of like a Google Doc form. You complete it that the student did not receive a W-2, and it's they're just stating, I did not receive a W-2. It gets submitted. Your student is going to get a electronic form from to sign from DocuSign. And I'll just warn you, oftentimes it ends up in spam. So have them watch their inbox, especially if it goes to a school email. There might be some delay in the, because the filters are pretty strong. And then if they don't see it within an hour or so, definitely check the spam filter, because that DocuSign invitation will expire, and then you have to download it, sign it, upload it, and send it back again. It's a real hassle.
Okay, so a question about non-custodial parents. Can you please review how a non-custodial parent fills out household size on the CSS if there is an agreement that the custodial parent claims all the kids on the CSS and the FAFSA as they provide the majority of financial support. Does the non-custodial parent just claim a household size of one? And if you want to step back and just explain maybe more like generally about divorced parents and kind of whose finances are included and if they're remarried and all of those different variations.
Right. Okay. So a lot of people get the FAFSA and the CSS profile confused when it comes to divorce and separation and such. On the FAFSA, you only have to provide the parent who's providing the most financial support. On the CSS profile, they want both parents and the step parents if you've remarried. If two parents, biological parents, have never married, but they live in the same household, they want both of you. So the CSS profile is a little bit different. With the non-custodial parent, it means that you are either you're separated, living in two separate households, or you're divorced and living in two separate households. If you're divorced and still living in the same household because of expenses, you file together. So it's kind of, it's different on the FAFSA. You can still file as the non-custodial parent, but you're both in the same household. So you're the non-custodial parent, you live in a different household. When your student and their custodial parent are completing the CSS profile, they're going to input your name as the non-custodial parent and your email address. And then you're going to get an invitation from the College Board to create a CSS non-custodial profile account. It's your account, but it gets confusing because, wait a minute, are they asking about when I'm going to college or my child? So that's how you're syncing it up. You're inputting, so just always look, what screen are they asking? Is it student information or parent information? And I had a parent who texted me in a panic because she said, I logged in and all of a sudden my ex's information is there and whatnot. The student had gone in and changed things that mom did. The custodial and the non-custodial parent do not see each other's information. So we got that sorted out. But then I get another, very irate email. How come they're asking the same questions? Because each of you are contributing somehow to your children. So they're asking the question to you as the custodial parent on your student's College Board account, and they're asking the same questions of you, the non-custodial parent. You're just answering for yourself, even though it says parents. It's very confusing, but it's just, could be parents because maybe you've remarried and you're having to include the information for the new step parent as well. But it's totally separate, and it's totally, neither one of you are ever going to see each other's information unless your student provides, their login and password. So
But
hopefully that
yeah,
covered it all.
and it's probably obviously too late for a lot of people who might be on this call, but sometimes we give people advice to not get remarried yet
Yeah.
until their child is through college, because if you do remarry, then that your new spouse's financial information is going to be included.
I mean, it's a horrible thing to plan your life around that, but the reality is if you are, if your child is eligible for institutional aid and you getting married is going to,
Even though that new spouse has no obligation and has no plans
correct.
to even contribute, to
Correct.
paying for
Or
college.
they're supporting their own children from their previous marriage as well. It's not a fair system. So you want to try to analyze, well, how do we work within the framework of this system so that we don't get penalized, but at the same token, not have it ruin, our future.
Okay, here's a popular question too about the questions that say they're not required. Are they really not, are they really optional, or should people be answering them?
So you get the little red asterisk because they absolutely have to have a figure in that box in order for you to go on. But the other questions that don't have an asterisk, they're not asking that because they don't want an answer, especially the line items on the tax return. If it's there, put it. If it's not, if there's nothing there, don't put it. Um, I think I saw somebody said something about the special circumstances, because
Right.
they're concerned about giving too much information because you want to save it for the appeal.
Right.
The special circumstances box in the CSS is not for you to appeal. It's just an explanation of your special circumstances. If you had a 25, you lost your job at the beginning of the year, you can just state that. Or you had medical expenses that were beyond the 3% or 7% or such, or you're helping to take care of your elderly parents or such. So those are the special circumstances that you can state there. It's just kind of like a bullet point, but it's not to go in to appeal certain things, especially if you had a substantial drop in your income in 25. Get your taxes done as soon as you can in 2026 to be able to submit that appeal later on. And you the school's timeline for these appeals, their sense of urgency is not the same as yours. They may not start to accept appeals until March or
Mm-hmm.
April, and they have their own forms. And if you go on their website, and I won't say the name of this school that drives me nuts, that the forms are always 2 years old. Um, they want specific forms for the 26-27 school year. And they won't accept the 25-26 form for special circumstances or job loss or whatever the case is. So just try to get your documents in order, get your taxes done if you've got to show these things. If you've had a lot of medical expenses, get those documents so that they will send you a verification form for you to, say, in how much did you spend on medication? How much did you spend on copays and so forth? Have it ready so that you can submit it as soon as possible so that you're not further delaying these really stressful questions that you need answered, to make a decision, but it's not on, they don't have that same timeline that you do.
Okay, Joanna, I have a question for you. Somebody wants to know how should the private college 529 plans be reported on FAFSA and CSS Profile?
Yep. So treated just like other 529 plans, which is great because they are treated as a parent asset. So which means that they are factored into the formula at a lower rate than if they were treated as a student asset. So that is another nice benefit, even though the student is a beneficiary, it's treated as a parent asset. On the FAFSA form, the parent only reports the value of the account for the dependent that they're completing the FAFSA for. On the CSS profile, profile, there is a question that asks about 529s for that the parent owns for any sibling. I think there was also a question earlier about whether or not if it's a 529 plan that's owned by somebody other than a parent. And that is actually one of the changes that they made to the FAFSA several years ago. So if it's a 529 plan that's owned by grandparent, aunt, uncle, or a really great family friend, it would not be reported as an asset. There is a question, right, Luann, on the CSS profile about additional money that might be received on the student's behalf. So it would, the advice would be to report it in that section. Do I have that correct, Luann?
Yes, yeah. But I will say, if you're unsure, then don't put anything. You know, don't go asking for trouble. Don't just assume, oh yeah, my parents said that they would help for college. Well, your parents are thinking, 30 years ago when the cost of college was a fraction of what it is now. And if you haven't had those discussions, there might only be $5,000 in that account and you're expecting 30, so be very careful. Don't provide more information than what you actually have.
But just to reiterate, Joanne, because I don't think this actually came up earlier when you were describing the private college 529 plan. Um, it's not just the parent who can take it out. A grandparent can also create that
That's right.
plan as well.
That is right. Yep. Anybody can open a 529 plan for a beneficiary. Does not have to be the parent. Like I said, it could be a really wonderful family friend. Wouldn't that be fantastic? There was a follow-up question. How do you know if the 529 plan is in the parent's name or the student's name? The student is usually named as the beneficiary, but it's the rules are very specific on the forms that it is to be reported as a parent asset. If it's owned by the parent, if it's owned by somebody else, then it would not be reported as a parent asset.
Okay. So going back, this a quick question, Luann, you kind of alluded to it, but is there any way this family has twins? Is there any way for them to just copy everything that they did for one student in the CSS profile? Because it's gonna, I guess, well, it's almost gonna be the same. Obviously, all the parent information is gonna be the same.
Yeah, as painful as it is, because I'm seem like I'm a magnet for multiples, twins and triplets. And, just have complete one, make sure it's correct. There may be, different schools, of course, and then just kind of just feed off of the printout for the first one, whether you can open it up on another screen or print it out and as you're completing it, unfortunately.
Um, Someone is asking, Luann, if you get a confirmation once you finish the CSS profile, because they're not sure if they actually hit submit.
Oh yeah, you get a confirmation. It comes, if you're not sure, then you're not going to see anything. When you log back in, it's still going to say, pending application or, gosh, it's right in front of me and I can't think of the exact word, but it it will say it's been processed, and you can make a copy of the CSS after you've submitted it, and I recommend everybody do that. Download a copy, save it on your desktop or print it out or such, because, it never fails. If you need some information off of that, and you go to the College Board, they're down for maintenance or, whatever the case is. So just have a copy handy.
So somebody is asking, does having private school tuition expenses for a younger child increase or decrease your expected CSS payment? And maybe you can explain, like, why they're even asking, like, where that's included on the CSS profile.
Well, because a lot of schools will take that into consideration. It's kind of like having two kids in college. So they appreciate the fact that you're, paying for high school education, private high school education. So they'll, will it be the same as if you had two children in a, $85,000 a year college, maybe, maybe not. It just depends on how much you're paying.
Do you really do families really have to submit the CSS profile? This person is saying, I have a friend whose child goes to Marist and they still got scholarships without submitting it.
No, they don't have to. You can call the school and say, I feel that I'm not going to qualify for any financial, institutional, or need-based aid. Will my child still have the ability to earn merit scholarships if I don't submit the FAFSA and the CSS profile? And then call again to make sure that you get the same answer.
Mm-hmm. So I have a feeling this person hasn't started the CSS profile yet because they are asking that their child is applying to a lot of CSS profile schools. How can they fill it out once, or they have to fill it out multiple times? And is there specific information for each school?
No, you fill it out once. You have a whole long list of schools. The most I've ever had was 28 schools so far. And twins. But you fill it out once, and then you can, if you don't want to put all the schools at one time, you can log back in and add individual schools. And again, you'll just add the school, go all the way down to the bottom, you'll pay the fee and submit it. Some schools are going to have additional questions for that school. I've noticed this year that it hasn't been as much as it has in the past. So I don't know why, but there are not as many additional questions on the CSS, and it could be anything. Stanford, they asked two questions. What is the major and career path that the student wants to go into, and what's their second choice? That has nothing to do with finances. But then Harvard will ask, what are the make and model of your cars? And,
Right.
do you have a lease or own? So.
Somebody is asking, which I'm not familiar with this, and I don't know, Joanne, if you are, it's a Canadian version of a 529. They're calling it a RESP, RESP, and wondering how those need to be declared, if they need to be declared at all. In this case, it's the grandparent who's Canadian who has it.
Right, right. So same rules would apply. I'm not familiar with that type of savings plan, but the same rules would apply in terms of who owns. If it's not a parent-owned asset, it would not be reported as a parent asset.
This parent is saying that their child is applying to a CSS profile school, but is unsure whether they're going to be applying ED2 or regular decision. And both of those deadlines are an early January deadline. But the CSS profile is asking which deadline she's going to apply for. Does it matter if they submit for one and the student ultimately applies to a different deadline? Or should they
So
just wait?
I'm assuming because they're applying somewhere else, usually what happens is a student is applying early decision at one school and they find out that they either got turned down or deferred. And so then they have a second choice school that takes ED2, is I'm guessing what that is referring to. So you would just, you just have to watch the timing. And if the student gets deferred from ED1, then go in and add the school that you want for ED2. But if you submit it telling them you're applying regular decision, then on the CSS and it's been submitted, you'd have to call the school and ask them if you would be allowed to submit for ED2.
Next question is about a HELOC. This family took out a HELOC loan. They've already taken out an initial draw. They've used it to consolidate debt, but the remaining amount is still sitting in a line of credit. Oops, sorry, so how will that be looked at, like, on the CSS profile? And they're wondering, should we consider taking out a larger line of credit to reduce our equity? Or will they look at the line of credit as, valuable funds?
So
Or
it's
available
only
funds?
the portion of the line that you've used or that you can use like as your mortgage. So you can add that amount to the debt that you have on your mortgage, but that untapped line that's just sitting out there, it's just sitting out there. It's not being used. So you
So
don't add that.
the unused amount really isn't affecting
Correct. And
how
somebody, I saw, somebody asked, do they take into consideration your debt? No, they
no,
don't.
yeah.
They don't care.
Okay, so going back, somebody, and this maybe is kind of related to your description about what they should include in special circumstances. They are saying they want to remove what they initially put in the special circumstances section. Is it possible to go back in and make that correction?
I guess you could. But then that's going to remove it for everybody.
Mm. So you can't really, I guess what her question is, you can't remove it, just that information for one school.
Unless unless you apply to the one school first and don't include the, whatever you didn't want to include in the special circumstances, and then put the other schools after that and add that back in. Or if you hadn't already added that school in the initial submit list, you can go in and change your special circumstances for that particular school.
Joanne, here's another question about 529. The person is saying that the account is held by the uncle for the benefit of the student. And it looks like there's other accounts that the uncle also holds for the benefit of the siblings. How is any of those accounts held by the uncle to be reported?
It
It
wouldn't
does.
be, yeah, it wouldn't be as long as so there is a difference with the UGMA, UTMA accounts. Those are considered a student asset. And but with 529 plans specifically, if they're usually treated as a parent asset if it's parent owned, but if it's not owned by the parent, it would not be reported on the form. So I would just, as another follow-up, about the Canadian savings account, if it's a similar type of structure like a UGMA or UTMA, and it's actually a student controlled account that's like that, if it's a student owned asset, then it would be treated as a student asset as opposed to a parent. But with 529 plans specifically, if it's owned by somebody other than a parent, grandparent, aunt, uncle, it is not reported on the FAFSA. The college or university may ask for that information on the CSS profile.
Luann, somebody is having a problem. I don't know if you've run into this year. They said, I've been attempting to enter a date of divorce of 2024, and I'm continuing to receive an error message. But if I change it to 2023, it accepts it, but that's not the correct year.
Kind of weird.
Yeah.
There must be something, there might be something that's triggering that you input before that won't allow it to take it, is what I would think.
Next question is about taxable income. Do you have to put in your defined pension plan? Other taxable
So
income, yeah.
they do ask for it, although, sometimes it's very hard to find that information. You can contact your pension administrator, your HR person, and you've got a statement or such, then sure, include it. They're not assessing your pension. They're not assessing your retirement. They're just trying to get a picture of your financial foundation. So, if you absolutely can't get it, you could always, and especially if it's you're a teacher, and everybody knows teachers get pensions. Yeah, I'm just saying this kind of off the cuff, but so if you're worried about that, you can always say in the special circumstances, I don't know what my pension amount is. I'm a teacher, and I know I will get a pension amount, but I'm not retiring for another 15 years. And just leave it at that.
Okay, here's some multiple questions from somebody. In the student expected income and benefits sections, how do we answer the field for expected summer 2026 income if we don't even know if they're going to be working that summer?
So I always look at it like this. If they're not working right now, then just put zeros, because you don't know if they're going to work this summer. They're going to say, I want to have a free summer before I go off to college or such. Or if they've been working for the last 3 summers and they started working when they were, 14 years old, then you can put a figure there. But if they haven't been working, you're okay to put zeros.
And for the untaxed income for 26-27 school year, what counts as living allowances?
I'm not sure what they're asking. Can
I have
you
a feeling this is a
unmute yourself?
divorce situation.
No, hi there. Thank you. It's Amy who asked the question.
Hi,
Thanks. I
yeah.
really appreciate the info. No, there is a, I guess in the hint, like do include these answers, include blah, 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 and living allowances. And so I just wanted to make sure that like if my kid's home for the summer, for instance, and she's not working and I give her some pocket money to walk around or like,
No, you're
that's
over,
right. Okay, great. I
you're
just wanted to make
overthinking
sure.
it.
Awesome. Thank you. Thank you.
You're welcome.
And Amy had one more question. For the custodial parent, does the expected potential parental contribution need to match or be greater than the non-custodial parent?
No, I mean, you guys are completely different. And a lot of you don't talk to each other. So you don't know what the other parent is willing to do or not willing to do. So you can just put, when that question is asked, for the non-custodial, what do you think that they're going to do? You can say unknown. It hasn't been mentioned.
Thank you.
Mm-hmm. Yeah,
Uh,
they ask a lot of questions that are very difficult to try to figure out.
here's a question about verification. Well, I'll ask this specific question, but maybe you can just talk in general how they verify information. But this person is asking, will they verify information you provide about pensions, 401k balances, and other items that do not appear in your taxes?
So they're asking those questions. I've been doing this for 20 years. I've never had anybody that has ever been asked to upload a statement, because they feel that, you're not including. They can, they'll look at your tax return and see, dividends that you have earned and such, and they can kind of figure out, hey, where are these assets? But again, your retirement assets are not assessed. So I don't think that that's that big of a deal for them. Unless, you're showing, $20,000 of income and you've got, several millions of dollars, in retirement or such.
Okay, here's another, well, unfortunately, this situation, they're not divorced, but what do you do if you have a completely uncooperative parent? They've been separated for over 10 years. The other parent does not contribute financially, but they are not officially divorced. Sounds like they're separated, I would assume, living
That's okay
separately.
if they're separated. You can be separated for 6 months. And still, as long as you're not living in the same household, you're separated. Now, if you're trying to see, can we get a non-custodial waiver? They're very difficult to receive if the non-custodial parent is still in your life somehow. They see the student, once a month, or do show up occasionally at a school function or such. It's going to be very difficult to get a waiver. Just because a parent does not participate or want to participate to help pay for college is not an excuse for a waiver. There are plenty of families where the parents are married, living under the same household, and one parent refuses to cooperate as well. So it's not just the divorced or separated that have that issue. And I had a financial aid director say to one of my clients about 15 years ago, well, who her ex would not participate at all. And they just said, well, I guess we're not the school for your daughter. They just wouldn't budge, and he wouldn't budge. And it's not always the he's either. So,
Okay, another person is asking, and this comes up a lot too. They said they're doing some home renovation. They know in a few months that their assets will be reduced by another 40,000. Can they subtract that from their balance now, even though, because they know that the money needs to be used for another purpose?
no, you have to report it, but you can, in that little special circumstances section, explain it, $40,000 of the assets that we disclosed, whether it was cash or investment, is for a house repair or a down payment. We just sold our home. It doesn't mean that it's going to make a difference, but at least you can mention it and then possibly appeal it later on if that's the school. Once you have maybe your top 2 or 3 schools that you're kind of balancing and that are in the mix, you might want to appeal.
This next question comes up a lot too. I'm just going to summarize it, but basically, if you've been put on an account, maybe with like your elderly parent, and your name is on the account because they can't handle their finances, and you're helping them. How is that account treated for the CSS profile purposes?
It depends if you're on the account just to sign in the event of an emergency, or if you are a co-owner. And, it depends on how it was set up at the bank. So you could go back to the bank and make sure that you are just as a signer in the event of emergency. And then that way that you don't have to report that amount.
Could I jump in and ask a quick question that's totally related to this?
Yeah.
My mom has an irrevocable trust, but it's a Medicaid trust. So I'm a trustee, and eventually down the road, perhaps a beneficiary, but I'm not directly, I can't spend the money on myself. I can't spend it on tuition. Is that something that I would include, not include, note in special circumstances?
You would note it in the special circumstances because it asks, are you the beneficiary of a trust? And so if that's the case with your mom, then you can state that, it's her Medicare trust that you don't have any access to, and you can just hope that they're not going to hold it against you. And
Okay,
again,
thank you.
it's something that you can appeal later on if you feel that they've overstated your assets. So the way to, your assets are assessed at 5% with CSS Profile schools. So when it comes back in and you look at, your income and assets, and if it seems like, wow, this is really high. I didn't think it was going to be as high. And it's, very different from your SAI, from your FAFSA. Then you can contact them and question, did they take that into consideration? And is there a, appeal process? And they'll let you know, yes, you have to get this form, da, 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 and what you would need to provide for them.
Thanks very much.
Sure.
Okay, Joanne, here's another 529 question. I have a 529 with both my kids named on it. I asked for it to be 50-50, split 50-50, but the statement shows 90% under my senior child's name and 10% under my sophomore child's name. Is this going to be an issue when filling out the CSS profile if I only intend to use half for my senior? Can
Yeah.
you do that? Can you have a 529 with two kids' names on it?
You can have, so it will, if it's with the same 529 provider, oftentimes you'll log into your account, but you'll see both beneficiaries. Technically, the 529 rule is each beneficiary has its own 529 account. And so it's technically the value that you report is the value that's in that beneficiary's name as of the day that you file. So that's the market value of a 529 savings and investment plan. And again, it's whatever the value is right now in that 529 account under the beneficiary's name. For a prepaid plan, it's the refund value of that. So not the value of your prepaid tuition necessarily, but if you took a refund from that prepaid 529 account, that would be the value that you report on these applications. But it is whatever is assigned to that beneficiary. And probably what you're seeing is perhaps different amounts of growth within that account, depending on the investment portfolio.
Okay, we're gonna go.
I
I'm
actually,
really
that was my
sorry.
question.
I'm sorry, two people were speaking, but go ahead. Whoever asked the question, go ahead.
So this is June. That was my question. I think when they assigned it, they just didn't assign it evenly. So before I file the CSS, can I go to the 529 fund manager and ask them to split it 50-50?
You could do that and just check to make sure that again, timing, depending on when you fill out the form, that would be important to make sure that any adjustments were made before that.
Okay, thank you.
Yeah, you're welcome.
If I may follow up on the same topic, I thought for FAFSA, you only report under the the student's account. However, I thought for CSS, you're supposed to report everything that the parent owns,
That's right.
which also includes the siblings. So in the previous person's question, it actually doesn't matter because you
Not on the
have to
CSS
include the whole
profile.
thing.
You would include them both on the CSS profile. That's
Yeah.
right.
Right. So it doesn't matter. It doesn't matter.
Not for the CSS profile in what she's asking for.
Right. Got it. Thank you.
I have a quick question on the same topic. Is it possible to roll over assets from one sibling to another if they're with the same institution?
You can do that. Yep. You can change beneficiaries. Yep.
Thank you.
Yep. And you just work directly with that 529 provider to do that. And that's one of the nice benefits of 529 plans, that you can change beneficiary without penalties, depending on the student's situation.
Okay, thank you.
Okay. Another question about kind of marital situation. We are domestic partners, unmarried, living in the same household with our child. It looks like the CSS wants us to say that we're married filing separately, which feels like wrong information, but maybe it's the only way to complete it.
Are you both the biological parent of the student?
I'm assuming,
Yes.
yeah.
Yeah.
Okay. So then you're going to both be considered, for the CSS profile.
Right. But when I actually go to sort of fill out our tax status, it doesn't have an option for domestic partners filing separately. The only option is married filing separately, and the little note says if you're not married, like the note says to say that you're married filing separately, which feels weird to me, but maybe that's
Well,
just a quirk of the application.
yes, it's a
Okay.
quirk. And then just in the special circumstances, just state, we were never married. We're, we're partners. We're both a biological parent.
Okay.
But it wouldn't allow us to,
Okay.
to file any differently.
Okay, great. I haven't gotten to the special circumstances section yet, but it feels like I hope they have a lot of space.
It does
Having all
not.
these things.
It's only 2,000 characters, and it's not the place to vent. It's not the place to get emotional. It's not the place to talk about your horrible ex or, all the horrible things that happen, in our lives. Those are saved for the appeals. And then again, you still don't vent. But the special circumstances is just kind of like a bullet point, just to refer, this is why I said special circumstances.
And here's another question related to special circumstances. Somebody's asking, can they put in the special circumstances that the parent is still repaying their student loans?
There's a question that asks in the CSS profile, do you have student loan debt? Whether it's yours, your spouse's, your other older children. And then the next screen is going to ask, how much is there? So they're asking, did you repay any student loan debt in 2024 or 2025? But just remember, for everybody that was in the COVID pause and we're not making payments, just go back and think, geez, did I make any payments in 24 or did I, just let it sit in the pause?
And I haven't seen this question. The husband is going back to school to get a nurse practitioner degree. Can they list that as another person in the family? Going back to school, can that be part of the special circumstances?
You could, you could state it, but it's not a special circumstance. It's a choice. But you can, it's a place that you can state that, so that they, because again, they don't ask about your debt questions other than the mortgage, but they do ask, if other, for private high school costs or elementary school or such. So I would put it there. Could I say, and if you know for sure the school, and go ahead and put what the cost is going to be for 2026.
Okay, so somebody's saying, and it's just asking, if the school requires the CSS profile, can we opt to not fill it out? And it's the same question about, will that mean that they won't be considered for any sort of merit scholarships?
You just have to call each individual school that you're applying to and ask them. There's no other answer. But again, call more than once, because you have students that are answering the phone that are on work study, and sometimes they'll make an answer that they think that they know instead of asking for someone for the right answer. So, but if you don't want to complete it, that's fine. Just be aware that you're letting them know that you're willing to full pay.
Okay, two more questions and I think we'll be done. This is about investment properties. How are those handled on the CSS profile?
I mean, it asks, so it's an investment property. So you take whatever you owe on that and subtract that from the value of the property. So, and if it is an investment property tied into like an LLC, if you've got other expenses, other loans, other repairs and such, you can include that. And typically it's going to be part of your tax return as well.
And the last question is somebody who has a special needs child and probably has additional expenses related to that child, can they include that information in the special circumstances?
Oh, absolutely. Absolutely. And so oftentimes too, there's a special needs trust to take care of that child. And of course it asks, is there a trust for the parents or for the student? So you definitely want to make sure that they know that that trust is specifically just for that other child. Or let's say that your child that is applying has a trust because they were involved in an accident or some medical issue, and that trust is just there to take care of their medical issues. You can let them know that, and they will take that into consideration.
Okay.
I see
Well,
a FAFSA question, Debbie, right at the
Oh.
very end.
okay. Yep. Do you want to, let's see.
If I do an after-tax Roth conversion every single year in my 401k plan, it appears as a non-taxable amount on 1040. Since tax, however, uses this non-taxable amount as an additional income, which double counts any way around it, or should I not include it? Although FAFSA clearly indicates that I should. Well, so when you do that Roth conversion, I mean, you're paying the tax at that time. So it's showing as income, but you
It's a after tax, so the money is already after tax. So you convert the after tax to Roth.
Is this like
So
the
the
backdoor
tax was
Roth?
already paid on the after tax. But
Yeah.
on,
So
on the
there's
1040, I'm sorry, I think
it should indicate that there was a rollover or a conversion on your tax return. And then in the special circumstances, you'll indicate that is what that is.
okay, so special circumstances explain it.
Right.
Yeah.
You're trying to make sense of something that is on your tax return that has to show up, and you're trying to fit it into the CSS. And that's where these special circumstances does come into play that you can explain. Just like the question for the parent that asked about the married filing separate. They're not really married, but they have to, put it that way. Some of these questions are like fitting, a square peg into a round hole. So you use that special circumstances. Again, don't elaborate into it, but just a quick sentence so that you're bringing it to their attention, because they're not just like me. They're not tax specialists. So they're just looking at the bottom line figures. You have to bring something like that to their attention so that they will take that into consideration.
Got it. Thank you very much.
Sure.
Okay. Well, thank you everyone for showing up and all your great questions. Thank you, Luann and Joanne, for answering. And thank you, Private College 529 Plan and CollegeWell for being our sponsor tonight. Joanne, any closing comments that you want to share?
Just reach out if you have any questions. I know we covered a lot, and probably you'll have questions after the session this evening. So please don't hesitate to reach out. I wish you all the best of luck. I know this is maybe a new process to most of you, but there are a lot of resources out there that just want to help you navigate this. So use those every step of the way if you need them.
And we send out an email tomorrow with a link to this recording if you want to look at it again, but there'll be additional information about Private College 529 plan if you want to look into it further. And also if you want any additional help from Luann, we have different services that she can help you with. Okay, good night, everyone.
Good
Thank
luck,
you.
everybody. And just
Oh, one
breathe.
more important thing. How about Luann, is tell them timing of how long it takes so that they
Oh,
don't run up against like December 15th.
yes. So, some of these schools are sticklers. I will not name them. I have my good list and my naughty list. But, some of these schools, they know that the College Board takes, 3 to 5 days to process the CSS. And some of them insist on everything being in on a certain date. So know what your deadlines are.
So don't wait till the night before.
Do not. Now, some of the schools, they're going to give you a little bit of a leeway. The application deadline date is not the same as the financial aid application deadline date for most schools. A couple of them do have the same. So know what your deadlines are. And I just wanted to point out too, I'm surprised the question didn't come up asking about retirement assets. And yes, it does show up. It's in section 8. You'll see all those little sections when you go to start inputting information in section 8 for parents' employment. There will be a question asking about their employment. And then, do you participate in an IRA, 401k, whatever, and then the next question is going to be the combined total of all of your qualified retirement, not I have a stock brokerage account and that is what I consider to be my retirement. Unfortunately, it's not a qualified retirement. It's tax deferred, or in the case of a Roth, you've already paid the taxes, your earnings are not growing. It's a qualified plan. So just combine all of those, but they do ask everyone. So just take your time and don't rush.
Great advice. Thanks, Luann. Thank you, Joanne. Good night, everyone.
Good luck.
Bye.